a phone, and an internet communicator. An iPod, a phone. Are you getting it? These are not three separate devices. This is one device. And we are calling it iPhone. Today, Apple is going to reinvent the phone.
Wolf of Dubai.
If you don't know today's stock, which is Apple stock, then you either live behind the moon or on the Mars, because Apple is one of the most successful companies in the world, and we are talking about one of the greatest years of them on the stock market. Your boy get dressed for this vlog, so let's roll. So this year Apple stock absolutely crashed it. Now, to take it from the numbers, it's 86.2% in 2019 and 30% was the market, the S&P 500 performance. This is way outperformed the market and is one of the most valuable companies in the world. The second most profitable company as well. And how it went from a garage company to this, it's unbelievable, and it's big respect what Steve Jobs and also Tim Cook built afterwards to this brand, this company, this product. Absolutely unbelievable. There is a couple of reasons why this happened. Now, for once, and this is let's say the overall topic of the video, I think that Apple was undervalued for a very long time. We will go into the PS and PE ratios of the last years, and we'll compare it to this year and to the growth over the years. And we also know by just a couple of days ago there was the breaking news from China, which was always a critical market for Apple, that the sales rose dramatically to 3.2 iPhones in China. This is a huge 18% increase, and also from 2.7 in the year before. So you can see that it's way up there in iPhone sales, and this has for sure something to do with the new phone. Even though the people see very less innovation in the phones are actually just a super interesting product because it's just so much combined, and almost everybody has one of these products at home. And I believe that just moving forward, this company is such a beauty in everyone's portfolio. But let's dive into the stock by having an actual look into the stock. If you are watching my videos on regular basis, make sure to smash that like button. This would help to give the YouTube algorithm a shot to discover my channel to more people out there, so we can build a community out there for your stock investors. And if you're not subscribed yet, which is approximately like 70 to 60% of the people, yes, that's unbelievable, of people watching this video, so make sure to smash that subscribe button. Let's have a look into this stock. So as I said, the stock absolutely crashed this year. We started about 13th of January with $150 and we are about now at $312 per share. If you're just looking into this year, from the 2nd of Jan until now, it's already almost 5% growth, or even more than 5% growth in the year already. And the market cap of this company is already $1 trillion and 370 billion US dollars. We have seen, like in the last couple of years even, there was a really gain of this stock, but as you can see, the really gain started in the beginning of 2019 until now. Before that, we had some critical phases as well here in 2018. This was more or less a lot because of trade war was a big topic for Apple. Then there was the China sales, and also we had the discussions with Qualcomm, the big court case with the patents that apparently Apple stole or whatsoever also done, and the 5G iPhone hopefully will come out this year. So also the product portfolio is quite interesting for the next couple of months. The PE ratio is currently 26. This is, from a tech perspective, maybe quite normal, because the other tech companies like Netflix, like Amazon, you can see it on my other videos that they can reach up to 80, 30, depending if it's a growth stock, then even up to 200 if it's a tech company, but usually you say then between 20 and 30. So you can consider that the PE ratio is quite in the industry standard, which was not usual for Apple, okay? And we will dive into it now. Let's look into some numbers here. So approximately the revenue of 2019 for the stock will be somewhere between $260 and $270 billion. Now, this number is unbelievable for a company that started a couple of years in a garage, that it's always great to read. The quality in the products is just unbelievable, and they are crushing it. Now let's talk about the growth. Approximately the forecast growth for 2020 of this company will be about 10%. Obviously in this revenue ranges you have a slower growth compared to other companies like Netflix or other growth stories like Tesla, for example. Now the market cap of 1.37 trillion is just mind-blowing. And what is even more mind-blowing is how much cash equivalent they have on the balance sheet. It's $205 billion. So they can make really interesting acquisitions if they see this and this company really fits the picture. Now, the PS ratio, according to these numbers, is around 5.6, and the PE ratio that we talked about is 26. Now, this might seem okay for a tech stock, but Apple stock was very long time known for being quite reasonably priced, and we will dive into it now. So 2015, we had a PS ratio of 2.5 and the PE ratio of 11. 2016, PS ratio 2.5 and PE ratio 12, so you can see it's slowly growing. 2017, 3.5 PS ratio, 16 PE ratio. The 2018 was 3.5 PS ratio and 17 PE ratio. 2019 was 4 PS ratio and 17.5 on average PE ratio. And in 2020, we might experience those numbers that we're having now. Most probably this will go up, but will a little bit balance out with good earnings, with a good Christmas sales that they had for sure, and with the growing numbers from China as well. So you can see that over the time, the Apple stock got more expensive, and especially in the market where the market just get flooded with so much money. Apple stocks or value stocks, really what it is that Warren Buffett also invested in just recently, a couple of years ago. You see that those are even significant in growing their stock price. So you have to be careful if this is something that you miss out, because especially those stocks like Apple are easy candidates for cheap money to come into the market and be there for a very long horizon of investment. And I always believe if you are building an investment portfolio for a couple of decades or years or a very long-term perspective, Apple can not be missed out on your portfolio. Now, to conclude this vlog, let's talk about the upside potentials for this stock, because not only cheap money is the driver for this stock to go further up, but also the delivery of great products and numbers at the same time. So the next big thing is actually on the 28th of January 2020, end of this month, we will know how the earnings, especially the last quarter of 2019, really put the numbers down for Apple. I believe that the Christmas sale was strong because the iPhone 11 Pro is a nice gadget, and I think a lot of people are tried to upgrade from their X model, and I believe that they have so much potential in the next year, or this year especially, when they launch the 5G phone. But other than that, there are two main categories where to watch Apple for you to consider it to be in future investment, or if you want to double down on your Apple stocks, because Apple is in the transition to a service company, and the service sector inside Apple is growing astonishing 18% for such a big company. And also the wearable, the Apple Watch, the AirPods, and all these things that will be attached, that will get process power, will be interesting in the future, because in the future we will not hold our phones anymore. It will be all somehow adjusted or attached to our body, and therefore I think there is a huge potential as well. Therefore, make up your mind, let me know in the comments, and I see you tomorrow.